All right. Hello, everyone, and welcome to my YouTube channel. The Best Loser here once again. Today is Monday, the 12th of January 2026, and I am just about to start, will I say, what I will call the first video of this particular series. Okay, in this particular series of videos that I'm going to be posting on my channel as well. This will include, videos of the trades that I have actually taken. Okay, because again, I know that I post my trades in my Discord channel. All right, on my Discord where I just kind of post it. It's obviously they are not financial advice, okay, but I know that I put my trades out there. So thinking about it today, I think it's actually going to be nice for me to kind of give you guys, or for you to have an idea, the rationale, okay, behind those trades that I put out. Okay, I don't really want to call it trading strategy per se, because it's more about the rationale behind the trades. Okay, so obviously you guys know that I trade demand and supply zones. I trade reversals off of demand and supply zones. So what I want to do in this series of videos is to start recording some of my trade videos, not necessarily the ones that won, okay, but this is the example that I have right now. It's a trade that I actually took kind of like an hour ago. All right, so that's the reason why this is the one I'm posting. Like, for example, if you go to my Discord channel, for example, you can see this is that trade AUD JPY. I posted this in real time. You can see 7:39 p.m. All right, and obviously I do get trades that hit my stop loss as well. All right, so I just want you to know this is not about showing you winners. Okay, some days I'm going to show winning examples, some days I'm going to show losing examples. Okay, some losing trades. We all get winning trades, we all get losing trades. All right, what matters is at the end of the day, your strategy comes out profitable over a large sample size. All right, so now going back into the charts. Okay, as you can see here, this is the trade that I want to walk you guys through. So what you're seeing here now is obviously AUD JPY in a minute 30 time frame. You can see that obviously this market is clearly in an uptrend. All right, obviously the market is scoring higher highs and higher lows. As you guys know, I'm a trend trader, so obviously in this particular market I'm going to be searching for long opportunities. Okay, looking for demand zones that form on my charts. You can see obviously we have this really nice demand zone. The markets gave us a little hesitation right around 10600 institutional price level, and then the markets finally muscled its way to the upside. All right, and then slowly but surely we started to retrace, get that retracement into that particular demand zone area. Obviously, as this retracement started, all right, at the start of this retracement, I started obviously keeping an eye on this particular demand zone. All right, I had mapped out this demand zone. I had my alerts sitting just above the demand zone as well. So when the markets got to this particular area in the demand zone, right around that 10600 institutional price level, all right, obviously this is almost like a nice confluence level in my own opinion. Demand zone coinciding with the institutional price level, that's a really nice combination for me personally, all right, based on my own personal experience. So obviously as the market begins to get to that particular demand zone area, what I do is just to go ahead and zoom into the smaller time frames. Okay, if you pay attention here, all I do is just start to read price action. All right, there is pretty much a little supply zone in here. You can see, I know it's not the most obvious, okay, but you can see from this candle, if I went into, let's say, like a minute 2, for example, you'll notice that this is obviously a supply zone in here, and which is the reason why the markets gave us this push in here. All right, and from here you can see the sell-off that we had as well. So at this point in the charts, the markets are still continuously scoring lower highs and lower lows at this point. Okay, as you can see in this retracement leg right here. Okay, markets are scoring lower highs and lower lows. So what you want to do is as the markets begin to get into this particular demand zone area, you want to see pretty much a change of character. Like, you want to see the markets begin, the buyers begin to come into these markets. Okay, you want to see the bulls begin to turn around before you start looking for opportunities to take a trade. Okay, now, obviously the markets gave us a pullback again and even another new low. So the market's still scoring lower highs and lower lows in these areas of our charts. But as you can see, in this push that we had right here, okay, not only did this market break 10600 from below, right, to the upside, it also took off this particular, level that we had in this area. In my own opinion, that was a nice indication that the bulls are now coming into this particular market, all right. And all I had to do was just to wait, okay, for the market markets to give me a pullback. All right, a pullback. I am not really looking for any particular levels per se in this particular case, but I just wanted to get a pullback so that I can get me a nice risk to reward ratio. Okay, as for me personally, I like to have at least a 2:1 risk to reward ratio on my trades. Okay, and the reason why why I say at least is because, you know, depending on the anatomy, okay, the structure of that particular setup, that is what determines what the risk to reward is going to be. But at the minimum, for me personally, I make sure that it is at least 2:1. All right, so that obviously you guys already know the mathematics. Okay, for at least a 2:1, even if all my trades end up being a 2:1, I just need to win more than 33%, okay, of my trades in order to be profitable. So let's say if I took 100 trades, for example, if I took 100 trades, all I need to do is to win 33 of them. All right, anything more than 33 puts me in profits region, and you know, I think that is doable. All right, and that's the reason why, you know, even though this way, even though you score more losses than you win, chances are that you might still end up being profitable. Okay, in a similar manner, obviously, if you were going for, let's say, even higher risk rewards of, let's say, 3:1, in this case now all you need to win is just 25% of your trades. Anything more than 25% is going to put you in the profit range. Okay, so that's the reason why. So I wait for this pullback, okay, to increase my risk to reward ratio. Now sometimes, you know, if let's say again, like I said, depending on the anatomy of the setup, okay, if I'm getting like a 3:1, 4:1, maybe right around this area, I might just click it. Okay, I must not wait for, you know, the best price, because you don't know where this market is going to get to before turning around. Make no mistakes, even though in this case I appear to look like a talisman for getting that last peep, okay, 106.03 level as my entry. You know, I could have easily missed this trade if I was waiting to get in at, let's say, 106.02. I would have, you know, missed out on this position. So I just wanted you to know there's going to be a balance. Okay, yeah, it's not about squeezing in the last peep. Okay, it's about working with you know, your strategy, your risk reward ratios, and you know, testing out your strategies, back testing, forward testing your strategies to know that they are profitable. Okay, now in terms of profit targets, you guys know I already like to take my profits a couple of pips before hitting the previous swing high area. You can see this is the previous swing high. So in this case, obviously we do have this 106.25 level in here. Okay, this is like a quarter number, so I personally would not want to push past that level, and that is why I set my profit around 106.22, 106.23 area. Okay, and obviously my stop loss usually goes just a couple of pips before below this low level right here, because again, if the market begins to, you know, trade below these levels, then whatever it is that got me into this setup has been violated. That is the way that I think about it. Okay, so again, like I said, it is not like a strategy per se. It is more like being able to read price action and then you know, will I say, reacting accordingly, all right, based on how the market what the market is presenting. All right, so again, obviously entry here, this is a 2:1 trade, and well, this ended up being a winner. All right, so again, my intention with this particular videos is you know, for obviously those of you in the Discord, in my Discord, who see me post this particular type of, you know, setups in my Discord. All right, at least you have an idea what the driver is. Okay, yeah, this is the trade right here, for example. So when I post something like this, that way you understand, okay, I'm not just posting something random. Okay, as you guys know, I am not very active on the Discord, and that is not because I am not looking at the charts, but it's because obviously I only post when necessary. So you know, in case you're not seeing a lot of action, it doesn't mean that I'm not on my charts. It just means that there is nothing of interest, you know, based on the way that I approach the markets. Okay, all right, so I just wanted to put that out there. So hopefully with this particular new series of videos, you guys are going to get a chance to you know, see how I approach the markets and the rationale behind those trades. Like I said, some of these trades are going to be winning trades, some of these trades are going to be losing trades. The idea is just for you to have an idea of why the way that I trade. Okay, so that's pretty much it, guys. Hopefully you gained some value in this particular video, and if you did, please do not forget to hit on the like and subscribe button so that we can reach a bigger audience. All right. Cheers, and I will see you in the next video. Bye bye.